If you're concerned with financial stability, the banks should be the last place that you invest your money. With thousands of banks going under since the Great Depression, it's most likely the least safest place you could be stashing your cash if you're concerned with losing money. Instead, take a look at some of the most powerful financial institutions that exist in our industry today, and that's life insurance companies. And newsflash, thousands of banks and corporations stockpile big chunks of their cash inside insurance companies. Now, this may sound a little strange, but just stick with me and I'm going to dive into why life insurance companies are some of the safest places for you to save your money and some of the perks that go along with it. First, let's talk about the life insurance industry as a whole. It's not just the backbone of America, but the backbone of the entire world. The life insurance industry is one of the most stable and well-capitalized sectors in the entire financial industry. In fact, most legal reserve insurance companies, which are basically insurance companies that are required to have a certain amount of reserves on hand, have billions, if not trillions of dollars in assets under management. And newsflash, they're not just sitting on this cash. It is invested in double and triple A rated bonds, and they also hold 50% loan to value ratios on mortgages, which makes this assets extremely safe. And here's another key factor. Life insurance as a whole has been around for centuries. It got introduced into the United States in the 1700s, which is 3 centuries ago. And many of the well-known household names that you think of when you think of insurance companies have been around since the 1800s. Think about that kind of a legacy. These companies have weathered wars, economic depressions, stock market crashes, and they've always come out on top. Compared to banks, during the Great Depression, 9,000 banks had to cease operations, and of that, 40% never reopened. Compared to legal reserve insurance companies, which zero, say it with me, zero went under. In fact, many people don't even know this, but it wasn't the government that bailed out the banks during that time. It was actually the insurance companies. The insurance industry proved its resilience during one of the worst economic times this world has ever seen. And during the 2008 financial crisis, we saw yet again another 400 banks go under and another 900 be placed on the watch list. Life insurance companies, however, were largely unaffected during these times because of something called cross-insurance, which just simply means that they insure each other. So if any company were ever to have some kind of a financial crisis, which again, doesn't really happen, but if they ever did, the other companies would step in and back them up. And this ensures that insurance companies are able to stay solvent and pay out their claims. Now let's talk about where the banks are saving and investing their money. Did you know that banks put a large portion of their assets in life insurance? Yes, it's called BOLI, bank-owned life insurance. In fact, banks typically keep somewhere between 30 to 40% of their Tier 1 capital in life insurance. If you check out this list, you'll notice that some of the top banks in all of America have billions of dollars in life insurance assets. And if you read Chapter 2 of Money, Wealth, and Life Insurance by Jake Thompson, you'll see that banks save money into life insurance assets, yes, because it's Tier 1 capital, and Tier 1 capital is some of the safest assets banks can have. And major corporations also put large chunks of money in life insurance. It's called COLI, corporate-owned life insurance. And they do this because it's tax-free and it is a safe, profitable place to park their cash. If you check out again a few pages down in Chapter 2 of Money, Wealth, and Life Insurance, you will see a list of some well-known household names for companies that are doing this. Okay, so let me give you a little context around how banks operate. When you go to the bank and you put in money, you're doing that most likely because you feel like it's safe, right? Because they tell you it's FDIC insured, which just basically stands for the Federal Deposit of Insurance Corporation, meaning they're putting insurance on your money up to $250,000. But the reality is, traditional banks back in the day only had to have 1/10 of what you deposited in them in reserves. The rest, they could reinvest it, they could loan it out, they could reissue it. This is known as fractional reserve banking. But as of March 26, 2020, the Federal Reserve actually eliminated the reserve requirements, basically meaning that banks could now loan out as much as they want. So if we go back to understanding how the banking system works, you are depositing money in the bank. In return, they're paying you at best 1% interest on your money. Well, what they're doing is taking your money and going and reinvesting it or saving it into insurance companies, because in return, they collect 7, 8, 9, 10% or more, and it's tax free. And they only have to pay you 1% at best for borrowing your money. Now, here's the kicker. Most life insurance companies today are rated far higher and stronger than most banks. Many of the household names that you can think of are rated an A+ rating or better, showing the highest strength in financial stability, compared to many banks, which are rated at best a solid B. So here's the key, people. Did you know you can do exactly what the banks are doing? Instead of giving them your money at 1%, you can go and skip the middleman and go directly to the insurance companies and earn that 7, 8, 9, 10% yourself. So here's the big takeaway. While banks and governments would be the first to fall during a financial crisis, life insurance companies would be the last domino standing. With their conservative investment portfolios, their strong reserves, and their cross-insurance protection, the financial stability that they provide to people is unmatched. If you want to learn more about how to invest your money like the banks do, I've linked 2 videos here that will tell you all you could possibly need to know. Make sure you subscribe so you don't miss another video teaching you what the world's wealthiest do with their money, and I'll catch you back here next week on YouTube.